Okay, hi everyone. Welcome to today's webinar. So for today's session, we are going to be talking about the third part of our Fibonacci series, which are Fibonacci expansions. So we'll give about 1 more minute to let more people join our session before we get started, because I can still see some people joining. Um, yep, and after about 1 more minute, we will get started. In the meantime, let me know in the chat if you guys can see me and hear me. And yeah, we'll start in 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. So welcome to today's webinar for those of you guys who've just joined. Today's session will be about the third part of our Fibonacci series, which is the expansions. So as per usual, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie, and I'll be a speaker for today. I'm an investment analyst at Rocket, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We are going to do a quick recap on Fibonacci retracement essentials, so what exactly you should look out for. We'll look at the ideal market structure, so looking out for significant swings, following market trends, and then we'll get into the different Fibonacci retracement levels because we are still using that Fibonacci retracement tool. Then we'll dive into what are Fibonacci expansions and different confluence levels that you can use with the expansions that we're going to learn today, as well as the other Fibonacci techniques that we've learned in the previous 2 weeks as well. So for you guys, any of you guys who were here with us in the previous sessions, not to worry. If you have any questions, feel free to just let me know in the chat. And I will also, I think if we have time, which we should have time, we'll just briefly go through a recap of what you should look out for the other two Fibonacci retracement techniques as well. Okay, so to start off, a checklist again. So if you guys were here previously, this checklist is not unfamiliar. So some things to look out for when first starting out with Fibonacci retracements. Firstly is the market structure clear. So you want to make sure that you're always looking for big zigzags. And we'll show you some examples in the coming slides as well. Number two is to identify the recent trend. So are prices going up or down? And it's always important to follow the general trend unless you have very compelling reasons why you think that prices are going to reverse. Number three, identify recent major swing lows and recent major swing highs. And we'll show you some examples in the coming slides as well. Number four, we want to connect the two extreme points. So from the highest to lowest if it's a downtrend, like in this image here, or from the lowest to the highest if it's an uptrend. So let's first take a look at an incorrect example of insignificant swings. So these should not be used for Fibonacci levels. Reason being, the price movements are way too small and there are no significant swing highs or swing lows here. Here's another incorrect example. So there aren't really any clear swing highs or lows here. Price movement is very minimal. So on the other hand, here's a correct example of significant swings and something that we want to look out for. So a clear move up and down, there's obvious peaks and troughs and very clear market movements as well. Okay, here's another example. So I've drawn out exactly how clear your peaks and troughs should be when you are picking out different charts to use. Okay, following the market structure. So here's an example of how not to draw a Fibonacci retracement trend line. So your Fibonacci trend line must follow price structure clearly. In this case, there is a zigzag structure, and the retracement drawn here cuts through the market structure, making it less effective. So when you're drawing a trend line, you should follow the movement of price and not deviate too much from the price movement. Okay, so this is something that we want to look out for. We want to pick market structures with a clear move upward or downwards. We want to follow price movement pretty closely. And as a result, this generally works better on higher time frames, so 30-minute onwards, since there tends to be less noise on the higher time frames. We normally will avoid any time frame that's less than 15 minutes anyway, simply because it's a little bit harder to analyze on such short time frames because of the noise. So here's an example of a clear market structure. So although Fibonacci retracements can definitely be used in both choppy and trending markets, it is important to look out for a clear market structure, so something like this. So here's an example of an unclear market structure. Okay, so let's look at the different Fibonacci retracement levels. So these are the Fibonacci numbers that we normally use. You can take a screenshot now if you want, but I will also introduce to you guys a website that you can use in a little bit. But basically, now that we know how to draw a Fibonacci retracement trend line, let's look at the different types of levels ranging from the negatives to more than 100%. So all of these techniques use the same tool, the Fibonacci retracement tool, but it leads us to three different types of Fibonacci techniques. Expansions, which are the ones that we are going to be focusing on today, are the levels that are negative or less than 0%. Retracements, which we went through in the first session, are the mid-range Fibonacci levels, so ranging from 23.6 to 78.6. And lastly, for Fibonacci extensions, we are looking at levels that are greater than 100%, namely the 127 and the 161.8. So here you can see all the different Fibonacci numbers that we mentioned in the previous slide, and how it looks drawn out. So you want to take note of the starting and the ending points of your trend line. The mid-range, again, are the retracements. The more than 100% are your extensions, and the negative are the expansions. Okay, so today we'll just be focusing on the negatives, which are your Fibonacci expansions. So using the Fibonacci retracement tool, we make use of the negative levels, the minus 61 and minus 27.2. So when using this tool, you want to look out for a flash or zigzag kind of shape, or we can also call it like a lightning bolt shape. So ideally, price should retrace at least 50% of your third point before reversing off of it. So you can take a look at the GIF that we have here. We are drawing it from the starting point to the ending point, and we've also drawn out the shape of the lightning bolt or the flash symbol. So it should retrace at least 50%. You can follow from the retracement levels, and then we're looking for a reaction off of the negative level. So you can watch it again. Okay. So yeah, you can see that reaction off of the minus 27 level. 20, yeah, minus 27. So here's an example. You can see the yellow arrows form this lightning bolt shape. Okay, your starting point, take note of the starting point, the ending point, which is where we draw a retracement. It retraced at least 50%. So here it retraced up to 61.8. And we're expecting price to come down all the way to this minus 27.2 level, where it could bounce from this support level. So quite often we will use Fibonacci expansions, this technique with our retracement, as you can see here with price retracing the 61.8 level. So I'll do a bit of analysis in a little bit at the end of our slides, and I'll show you how exactly we use Fibonacci levels together with our horizontal levels just to form certain levels. Okay, so here's the outcome of our previous slide. So this was a previous slide again. Okay, so you can see price reacted after 61.8, moved downwards. We actually have this support level here that price broke out of. It reversed off our minus 27.2 and it bounced off really nicely. So a pro tip is that price normally does come back to the ending point, which is why we refer to this level, this red highlighted area, as a pullback area, because price often will come back to this kind of level where it has been a swing low before, but price broke out of that swing low support and is now coming back to pull back or retrace back to that level. Okay, so it's really good if we are able to find certain retracement levels that line up with these kind of pullback or overlap levels. Okay, so take note of the flash zigzag. Here's another example where price broke through that minus 27.2% Fibonacci expansion level, but it reversed off the minus 61.8. Okay, so our expansion level is here, and you can kind of see that lightning bolt shape as well. Okay, and you make sure that price retraced more than 50%. It's definitely more than 50% here, and it moved upwards, broke out of this double swing high, and headed towards our minus 61.8. Okay, another example here. Take note again of that shape. Okay, the flash symbol is like this. If you just follow my mouse, right? So you're basically drawing it at the first move of the lightning bolt. So that's where you draw your Fibonacci retracement trend line. Okay, so we're drawing it and we have prices breaking below this double swing low, broke out of it and reversed off the minus 27.2% Fibonacci expansion level. Okay, so in this GIF, you want to take note of the shape that's outlined by the orange arrow, which sh shows you pretty clearly the shape of like a lightning bolt or flash or just a Z kind of shape, like a sideways Z. So price retraced more than 50% of the Fibonacci trend line. In this case, more than 100% in fact. And it reversed nicely off that minus 27.2% Fibonacci expansion. Okay, um, let's move on. So when does a Fibonacci retracement become invalid? And one of the most common scenarios of this is basically when, um, oops, can everyone still see my slides? I'm not sure why my screen suddenly blacked out. Okay, but it looks like I'm still sharing on Zoom, so it should be fine. Okay, so here is, oops, yeah, so an invalid retracement occurs when price makes a lower low. And if there are bars on the right that break your invalid point or your ending point, then it becomes invalid. So there are Fibonacci retracements that become that are negative, which we are talking about now, and we will go through these more in depth. But basically, if they go beyond your endpoint and okay, I'll just show you an example here. So if they go beyond your ending point here, it's considered invalid. Okay, so this example, we have price breaking that 0.0% and it's made a lower low. So you always want to remember to pick the lowest point with nothing on the right of the ending point here. Okay, so confluence areas are pretty important and they're basically levels that have multiple Fibonacci levels lining up, namely two or three or more than two Fibonacci levels lining up. Okay, so the trick here is to find multiple Fibonacci retracement levels that line up together so that you can increase the probability of a bunch of Fibonacci retracement levels working versus a single Fibonacci retracement level working on its own. So you can see in this example that I have here, we have your Fibonacci expansion from the red arrow. Okay, that lightning bolt shape I think is quite clear. You also have the 161.8 Fibonacci extension level that we went through last week, which is basically this inverted Nike tick. Yep. So for those of you guys who weren't here last week, just to get you guys up to speed, a Fibonacci extension uses the levels that are greater than 100%, and we're looking for this tick kind of shape. So this gray arrow is where we place our trend line, and we are projecting where prices will reverse off of. And this uses the levels that are greater than 100%. For the yellow, we haven't gone through this yet, and we'll go through this next week. But basically, um, the projections are closely related to our expansions since they use the same shape. So these also look for flash or lightning bolt kind of shape, but it uses a different tool. So this uses the Fibonacci extension tool on TradingView, and I will show you guys in a little bit. But yeah, so they use 3 points as indicated here. And the 78.6 projection lines up with the 161.8 extension, lining up also with our expansion. So you can see price bouncing off this Fibonacci confluence area. Okay, so here's another example. Here we are looking at an expansion and an extension. So here price broke above the 127.2% Fibonacci extension level. So we're expecting price to reverse off the 161.8. Okay, in addition to that, we also have the minus levels, so the minus 61.8. Actually, both of the Fibonacci expansion levels line up nicely with our extension, so which is why we kind of have to be careful over here. So if price is unable to break out of this level, since two Fibonacci levels line up, then we go in for a buy towards this level here. Okay, and reason being because you can see how closely they are lined up. It would actually be better if we had multiple other swing high levels or swing low levels in the past, but we can't really see that now. Or other Fibonacci levels that line up to give us a stronger confluence area. Okay, another example here. So in this example, the minus 27.2% Fibonacci expansion, this is the blue arrow. Okay, you can see, I think you can see the lightning bolt shape as well. So the blue arrow is expansion, the orange arrow is our projection, which again I will go through next week more in depth. But basically all you need to know for projections is that they use the same shape as your expansion, so the same lightning bolt shape. Okay, and lastly, the 127.2% Fibonacci extension. So the orange arrow is, the purple arrow is basically where we draw the extension trend line. Okay, so the inverted Nike tick again is like this, and then it's the tail end over here. And we can see that all these three levels line up pretty nicely over here. So they don't have to line up exactly in line because, as I mentioned earlier, we are looking for confluence areas more so than specific levels. So when we are looking for confluence areas, as long as they are kind of close to each other, like what we have here, that's good enough. So it's even better if you can find all of these levels that line up with previous levels of reference, so a swing low or a swing high. Yeah, so that would kind of strengthen your analysis. So prices currently have bounced off of this confluence area and reversed off of it. Okay, so some trade management with Fibonacci confluence. Firstly, your stop loss should always be placed beyond your confluence area. Reason for this is because more often than not, price is attracted to such strong areas of confluence. So if your stop loss is right before, instead of beyond that confluence area, you will most likely get stopped out before the market starts to reverse. As for take profit, it should always be placed before a key Fibonacci confluence area because when price reaches the confluence area, there's a high chance that it won't be able to go beyond it. And instead of reaching your profit target, it reverses back to your entry or even worse, your stop loss. And that's also one of the reasons why people complain that the market is being manipulated because they miss their take profit by 1 or 2 pips. Okay. Are there any questions? Okay. I'm just gonna introduce this website to you guys. Um, so it's just the forexarmy.com. So if you go into the trading guides, you can click on this how to draw Fibonacci retracement correctly. And yeah, so you can go through some of these as well. So we have some YouTube videos on retracements and extensions. if you've missed the previous two webinars. And we also have um, some guidelines, so what to look out for, and we went through all of these today as well. But basically, you can also use certain charts, just use it on a different time frame so that the charts are clearer. So this is the market structure on a 15-minute view, and this is a market structure on the H1 view. Okay, so you can always like play around with the time frames and make sure that you start your analysis on a clear time frame so that your Fibonacci retracement is more accurate. Okay, so yeah, we went through most of these as well about following the trend lines. So you can refer to these after this webinar when you want to get started on your own and you're not sure how to get started. Yeah, it's also completely free to use. These are the levels that we are looking at today, the levels that are less than 100%. Less than zero, sorry. So less than 0%, so the negative levels. So yeah, we went through most of these already. Just if you need some more help or some guidance, feel free to check this website out. Okay, we also go through some confluence examples using the other Fibonacci techniques. Yeah. Okay. We still have some time, so I'm gonna pull up my charts and then we can go ahead and take a look at some charts together. So if you guys have any requests for any charts that you'd like me to go through, feel free to let me know in the chat as well. Okay, we have a request for, wait, gold and WTI. Okay, let's go ahead and take a look at DXY first. Okay, so on a weekly time frame, you can see the prices of gold kind of, DXY, sorry, kind of dropping recently. I'd like to start off by looking at the higher time frame so that we get an idea of the general trend of price. And then now going in with okay, you can kind of see prices moving in a downtrend as well, although there is a slight uptick over here recently. Okay, I'm gonna place my pivot over here. Okay, and then my first support over here. Okay, so this is purely just graphical. Like I'm just looking at where the swing highs and the swing lows react off the most, and I'm just placing my support and resistance levels there. Okay. The next step is then to go in with our Fibonacci levels. So I'm going to start off first with a retracement. Okay, you can see my 38.2 lines up nicely with our first resistance. 23.6 also lines up, yeah, with our pivot. So I'll keep both of these levels. 23 and 38. Okay, you can also see here we have a bit of a lightning bolt shape. Okay, so you can see I've used this tool, which is the trend-based fib extension, and this is something that we're going to focus on next session. This is what we call our Fibonacci projection, which uses 3 points. But this is also the level that I meant, the technique that I mentioned earlier is closely linked to today's technique, which is the lightning bolt kind of shape. Okay. Um, okay, our minus 27.2 lines up with our first support. As I mentioned earlier, doesn't have to line up exactly. Okay, so if you can't really see clearly, the lightning bolt shape is like this. Okay, you can see price has definitely surpassed more than 50% of the initial move, and I've also drawn my trend line on the first move down. Yeah, I'm actually gonna place a um extension level here, just an intermediate level. Okay, here we have a bit of an extension. Okay, so this is our Nike tick shape. Okay, and the 1 to 7 lines up with our first support as well. Oh wait, actually, does it line up? Oh, okay. So this 1 to 7 kind of distracted me. So that's why it's always important for you to clean up the Fibonacci levels because otherwise it can get a little bit messy, especially when it comes to looking for confluence areas and we're using multiple techniques on top of the same areas. Okay. Um, I have a descending trend line here. But we'll have to see if price actually manages to push above it because currently price has rebounced off of this intermediate level, our intermediate support, this dotted line. So I'm wondering if price is going to be able to push past that. Let's take a look at some indicators. For this, I like to look at RSI or stochastic. Okay. So we actually have prices moving in this descending trend line, as you can see here. But prices actually broke out of the trend line. So that could actually be a forecast that prices are going to actually break out of this trend line and head towards our first resistance and continue in that upward movement. So let's take a look at some other indicators to see what else, whether they support our analysis or if they tell us something else. Okay, so MACD you can see is also giving us this bullish signal. Ichimoku is giving us a bearish signal, so I'm going to remove it. Okay, Bollinger Bands, if I zoom in, you can see they are moving above that middle line. So it could suggest that prices are changing direction. Since you can see, if prices are moving below the line, it suggests that prices are going to continue in a downward momentum. Here, prices recently pushed above the upper or the middle line. But I'm not 100% sure, so we'll KIV that. Let's look at moving averages. I like to use both the SMA and EMA. Okay, for this, you can see prices recently moving above the both of the indicators as well, which also give us a bullish signal. Okay, so we could see prices actually continue to move above this or break out of this descending trend line and head towards our first resistance here. Okay. Okay, but we'll see if price manages to break out of this descending trend line. Okay, so in this case, because we only have, oh, actually, okay, this pivot level, this horizontal level is quite significant as well because we have multiple swing lows lining up with it. So we have that, and I was going to mention that because we only have one Fibonacci retracement level that lines up, um, it's not as big of a confluence area. But in itself, since there are so many, since price has reacted off of it several times before, we could see price break out of this as well, or rather, we should see if price breaks out of this pivot, but also that descending trend line. So two things that we have to look out for before going in for a buy towards the first resistance. Okay, so this is DXY and we're slightly bullish on DXY. So yeah, let me get to, I think it was gold. Okay, so on our weekly time frame, you can see prices are pretty bullish. On our daily time frame, with prices moving in this ascending trend line, it's also giving us a pretty bullish um trend, although currently we are seeing prices reacting off this pivot level here. So gold is often inversely related to DXY. So that's why I like to analyze DXY first to get an idea of the direction that prices are moving towards. Big 50% lines up nicely with our first support. So you can see 100% lines up with our pivot as well. Even though the other levels did line up as well, because price is already broken out of it, that's why we can't use those levels anymore. Okay, you can see my 161, my minus 61 also lines up with our pivot. Um, okay, I don't actually think we have any more levels on our daily time frame. So I'm gonna analyze it on our daily time frame instead. Oops. Okay, we have this. Okay, no. We have this level here. Okay, I'm just gonna use this 100% because that lines up. I mean, that's above our level, all our other levels. So this is gonna be my first resistance. And this is solely because, as you can see, we don't have any higher levels of reference above this pivot level. So that's why I'm using our Fibonacci tools to help us to identify some other levels that we can use our resistance for our resistance. Okay. I think that's all the levels that we have currently. Okay, we can already see price reversing off of our pivot. Okay, this is also a bit of a confluence area. You can see we have two Fibonacci levels lining up here. So let's look at our indicators. You can see price kind of bouncing off our Ichimoku cloud, which is a bit of a bearish signal, but I can't really say for sure until price has fully moved below the Ichimoku cloud. So I'm going to KIV this. You can see MACD is already giving us a bearish momentum. And if you look at RSI, okay, RSI isn't telling us much. Let's look at Bollinger Bands. Okay, again, you can see prices moving below that middle blue line, which again could be a sign of a change in trend. So it could be a sign that prices are going to continue moving in a downtrend. So again, I'll KIV that. Mm, okay, stochastic isn't really telling us much here. Okay, it is kind of moving in a descending trend line here. So I will keep it here. And I'll make do. Let's look at our moving averages as well. So you can kind of see prices moving below, very recently moving slightly below both of our indicators. So that is also a sign that prices might be changing trend and we might see price continue to drop. Okay, but we're only kind of seeing a bit of a change now. So we'll just have to see if it continues in this downtrend. Okay. Um last one, let's look at WTI. On our weekly time frame, you can see prices moving in a downtrend. You can also see on our daily time frame prices moving in a downtrend as well, although there is a slight uptick here. But yes, actually prices moved upwards significantly recently. So here I'll place my pivot. Okay, because I'm naming it a pivot because we have swing highs and swing lows that are lining up in that area. Mm, okay, this will be my first support. And this is my first resistance. Okay, so I can't really use this level, but just to show you guys, this Nike tick shape here. Okay, I can't really use it because my first support, I placed it here instead of down here. Okay, so because price has already broken out of it, I can't use it. And the reason why I'm placing my first support here instead of all the way here, okay, is because even though it's kind of a slight difference, you can see how many swing lows line up with this first support, which basically means that prices have reacted off this level many times in the recent past. So I do want to take note of this level. Okay, but you can see what we went through earlier, the 161, prices reversing off of it. Okay, we have two swing lows and we also have a 161 that lines up nicely. So I'll maybe label this as kind of a second support level. Okay. Okay. A retracement. We have a 38.2 lining up nicely with our pivot. Okay, we can't use this level because price has already broken out of it. Okay, you can see our minus 27 also lines up with our first support. But again, price has already broken out of it. So here's the lightning bolt shape, if you can't tell. Okay, but you can see here, price has broken out of it. So we can't use this level anymore. Although we might be able to use the minus 61, despite it being quite far from the first support, but we can leave it in for our second support. Okay, just for reference, I guess. Mm, okay, I think that's all the levels we have. Let's go in with our indicators again. Price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD on the other hand is giving us a bullish signal. If we look at RSI, okay, RSI isn't telling us much here, so I'm gonna remove that. Stochastic. No, stochastic isn't telling us much, although it is giving us a bit of a bullish momentum over here. Reason being, we have what's called a divergence here. So we have two swing highs here, right? And price has been making lower highs, whereas here they are maintaining at that same level here, right? It's testing that same horizontal level. So this is our resistance. And you can see prices also, where price is currently at here, made a lower high, sorry. Slightly lower, but where price is currently at, that's in line with our resistance. So we could be seeing a bit of a resistance. It could be foreshadowing a bit of resistance there as well. Okay, that's for stochastic. Let's look at Bollinger Bands. Okay, you can see prices moving above that middle line again. So that is a bullish signal. But again, actually, yeah, I'll keep it. I'll keep Bollinger Bands since it does support our analysis. So for now, it looks slightly bullish. Okay, but I would wait for price to break out of this pivot level before going in for a buy. Reason because we have a hidden resistance here. We also have a retracement level. Yeah. Okay, are there any questions? Okay, if not, thank you guys so much for joining us today. I hope you guys found this session helpful. Have a great rest of your week, and I will see you guys again next week for our final session of the Fibonacci technique. Thanks, everyone. Bye. Thanks, everyone. See you guys.